Hello, happy Wednesday, and welcome to the Day Tradestor. If you've been following my videos, you may have noticed that I haven't put any videos up for Friday, Monday, or Tuesday. And the reason I did not put any videos up for Friday, Monday, or Tuesday is that we did not have any stocks hit our sell triggers. And since the strategy that I am trying to show you in these videos are a swing trading strategy, even though I do other trading in this account, specifically day trading, I had nothing to produce in reference to the swing trading strategy. Now for today, you can see we've gone down all of today and we went down yesterday. So we're currently sitting at 66.30. So we've lost roughly $70 in the last 2 days. And with this downward move, we do have some stocks hitting their sell triggers. Thus, they're sending me some possible sell alerts. Now, only time will tell if we are actually in a long downward trend. The market is definitely still in a bullish bias, but we could see a short-term downward trend for, the rest of this week, maybe on into next week, or this might be the only 2 days that we see this downward move. But to prepare for the possible downward move, we want to try to identify some zones that we might be able to bounce off of due to support. And the first zone that we're going to locate is these 3 candles here. We had a little bit of a movement that just went sideways here. So we'll go ahead and we'll draw a box. We want to add a drawing, and we're going to add a box. And we're just going to bring this, we'll bring it down to the bottom of the close of that, or the lowest point on that candle. And there is the first zone. And then using technical analysis, we want to find another area in which we had price moving sideways for several days, and that's here. So we're going to draw another box, use from the top of this candle to the bottom of these 2. So we're going to add another drawing. And we're going to bring this one in, and we'll close that there. Now I'm going to go ahead and zoom in, and it's quite possible you could see where we had price come down to the top of this zone, which is the first area that we would have had any type of support, and price bounced off of that and is climbing for now. It's climbing. If sometime today or tomorrow it decides to turn back around and go back down, this is an important zone that we want to look at, because anywhere within this range is a reasonable area of support where price can just bounce from. If it were to continue through this zone, the next zone is here. We're looking at a roughly we'll just say $25 difference. So we can have a $25 move before it hits another area in which zone in which price might decide to bounce off of, or any time with any point within this zone of support. Now, we're going to expand our chart back out. We can actually, if we wanted to, we could bring this zone all the way out to August 12th. This is a major zone of support, so we'll go ahead and do that. In order to do that, we want to highlight, left click into this box. We'll grab the corner and we'll just drag it out. And we want to stay at the top of that candle. So this just identifies that it's a much larger zone of consolidation. And we're going to actually bring the box down to the bottom of these price points. And now we've got a much more broadly defined zone of support. So if price does continue to fall, and it falls through this zone over the next several days or weeks and moves into this zone, anywhere within this zone is probably a likely place for major support. So with those 2 zones identified, we're going to go ahead and start taking a look at our sell alerts that we've received today. And the first stock we are going to look at is HPE for Hewlett Packard. As you can tell, this is a stock that I have been day trading for a while. So yesterday we had our price move below our fast moving average, and we clearly have a continuation. So we are hopefully going to be selling some at a profit. Now I currently have 15 shares, which is 3 books with 5 shares for each book. I currently have a limit order for one of the books, and I did purchase 5 for $24.27. So we will be selling 5 shares at a profit. So $24.44 if it goes at $24.44. Oh, we don't want to buy. You don't want to do that. That was a mistake. We want to sell 5. Don't like making that mistake, but it does happen. All right, so we were able to cancel it before that sell order or buy order took, and we sold those 5 shares at $24.43. So that's, we'll just say 15 cents per share profit. So we made 75 cents on the Hewlett Packard. All right, so the next stock that we have that we received a sell alert on, and we're probably most likely going to be able to sell something, is Natera, NTRA. Wow, if we look at these 2 candles of Natera, this moved down. We've gone from roughly 180 down to 165, which is $15. And if we look at our line, if we come all the way across our horizontal axis, you can see that if we come back to this candle here, we've wiped out a month's worth of gains in the last 2 days, or technically the last 3 days. So yes, if you look at our horizontal axis all the way back to this candle, that's 1 month of gains already gone. And that is a typical downward move. We can move up for days, weeks, and even months. And within a day or 2 or 3, it could wipe out weeks, days, and months worth of gains. So if you're new to the markets, prepare for that. Prepare for even worse moves than this to wipe out our profits. Well, not profits, to wipe out our portfolio gains. Now with Natera, I am maxed out with my 4 books having 2 shares each. So that's 8 total shares. I already have a limit order on 2 of these. Now we have 1 book of 2 shares that we bought at $169.31. So that book we've already dropped below that price. But I did have 4 other shares that we purchased at $161.39. So we will be able to sell 2 shares at a profit. So we had price yesterday move below our fast moving average. And we clearly have continuation of this price move. But not only that, we will receive, as long as price stays below and closes below our slow moving average, tomorrow we will receive a price alert because this has been triggered. And the alerts are sent at the close of day because they are set at not when price moves across, but my alerts are set to be sent to me when we have a triggered buy or sell at the close of the candle. So we have a possible trigger as long as price stays below our slow moving average for the remainder of day. That trigger will have been hit and it will send an alert to possibly sell tomorrow if we have continuation down. So we're looking to sell 2 shares. Come into our active trader and we want to be in our sell column, not our buy column, and we're looking to sell at 165. You can see this is already highlighted at 165.59. And we did sell those at 165.59. So we're just going to say that's round that to $4 profit per share. So that's an $8 profit today on Natera. So the next stock that we want to take a look at is Unity Software, which is just U. So Unity Software, same thing. We had price move below our fast moving average yesterday. We have a continuation of that move down. I currently have 32 shares. Now I'm maxed out at 8 shares per book. We will be able to sell this set of 8 shares, this 1 book at a profit. I already have a limit order for 1 of the books. So we're looking to sell 8 shares. Go in here, our active trader, bump this up to 8, and we're going to sell at our current price, hopefully at $44.59. Nope, price already moved to past that to $44.50, so we want to cancel that. And we're going to try this again at $44.55. Okay, that's not going, even though price is at $44.58, so let's get rid of that. And we are just going to sell market. And it sold at $44.59. So that's a little bit higher than just the $44.55, which we were just trying to sell at. Now those 8 shares that had just sold, we bought at $37.29. So we're just going to call that $7 of profit per share. So for those 8 shares, that's a $56 total profit for the sale of that one book on Unity software. So if you started following me back before this cross of the fast moving average above our slow moving average, it is possible that you may have chosen to make a purchase at this cross. Now, I might have purchased back here. It's just that I had to close my old account and I opened a new account. So this is why all of the day trading bubbles start here and not back here. But if I did make a purchase, which I probably did at the cross, that is when I make my purchases. I would have purchased probably on one of these 2 candles. So if you chose to follow me and you've been holding all along, then you sold possibly, if you're following my strategy, you would have just sold one book of 8 shares or whatever you purchased. If you did follow my strategy, you don't have to purchase the same amount of shares that I have. Maybe you bought 1, but if you did buy any shares and you're choosing to sell here at this cross, then you're making a profit as well. And that's the point of my videos. So from this cross, we're looking at roughly 8:15, August 15th, and we're now at the 23rd of September. So we're looking at over a month of a good swing traded strategy of this long run. And this is the momentum that we're looking to capitalize on. All right, we have one more stock that we actually will more than likely be selling some shares on that we received a sell alert on, and that is the ETF XLF. And this is an ETF for financials like banks. So very similar to the previous stocks that we were able to sell, and whether it was a profit or not, we had price move below our fast moving average yesterday, and we have price continuation of this cross. And just like the last stock of Unity software, we had price move below our slow moving average as well. So tomorrow we'll look for continuation on this cross to see if we're able to sell anything at a profit. But today we're selling shares based on this continuation of the price move across this fast moving average. I currently have 18 shares, and that is 3 books of 6 shares. So we're going to look to sell 6 shares. And I have 12 shares that I purchased at $52.76. So we will be making a small profit on this. So $53.59 from the $52.76. We'll just call that 80 cents of profit per share. So we're looking at $3.20 profit, roughly, on that book of XLF. All right, now I do have a number of stocks that did send a sell alert, but we are definitely past any point in which we would make a profit. So for those stocks, I have to make sell orders. So I'm going to go ahead and place a sell order for 2 of the stocks that we own, and I'll do that on video. The rest of those sell orders that I have to make today for today's alerts and the previous 3 days of alerts, I will do off video. So if you are following me and you're taking a look at our strategy and you're trying to implement that by copying me, if you are choosing to do that, I will put a list of the sell orders that I placed in case you did make some purchases along with me. That way you can place the sell orders as well if you're unable to sell those at a profit. So the first one we're going to take a look at is Palo Alto, which is PANW, P-A-N-W. And there we have Palo Alto. You can see, same thing. We have 2 candles of a downward move. Yesterday we had price move below our fast moving average, and we have a clear continuation. We have current price at $200. However, the least expensive share of stock that I purchased is $203.36. I'm currently maxed out with 2 shares for each book, which is for a total of 8. So we're looking for Palo Alto, PANW in our watch list. Right click. We're looking to sell 2 shares, and I purchased those 2 shares, as I said, $203.36. So we go to our first place, our first digit, which is the 200s. 10% of that is 20 cents. So we're going to add 20 cents, and the overall price will be $203.56. So $203.56. That didn't go. 200 backspace $103.56. We want good till cancel and extended hours, confirm and send. And there's our limit order for those 2 shares. All right, the last stock that we're going to do on video for sell order is Meta. And I only make 2 videos of my sell orders because I figure if you're new to the video and you're new to my channel, I don't want to waste too much time placing sell orders on 8 or 9 or 10 equities that we received possible sell triggers on. That's just way too much time. So I think 2 a day is enough to catch on to how to place a sell order if you're using Thinkorswim. So it's a time issue. So same thing we have, however, instead of 2 days ago, we have Meta 3 days ago crossed below our fast moving average. And this move was below my purchase price of $772. And since I wasn't making any videos in the last, since last Thursday, so we're looking at Friday, Monday, and yesterday without making videos, I didn't place any sell orders without making these videos. And since I couldn't actually sell any of the stocks that were triggered to sell for a profit, there was no reason for me to make any videos. At least I felt anyway. If you've been watching my videos and you were wondering what was happening on Friday, Monday, and Tuesday, and you were anticipating watching my videos, please let me know so I don't make that mistake again. If you're looking forward to receiving and taking a look at my videos every day, then I'll know on days where I don't have anything to sell at a profit that I can make a video for something. Maybe just some type of educational video. Maybe even showing you how I day trade. But at any rate, let's get moving forward and make this sell order for Meta. Again, if you're using Thinkorswim, we're coming into the watch list, right-clicking. We're looking to sell 1 share. I currently only own 2, so that's 1 for each book. So we're looking to sell, place a sell order. Now I bought my Meta, and I bought that for $772.09. So we're going to go to the first place digit, which is 700. 10% of that is 70. So we're going to add 70 cents to our price of $772.09, and that's going to be $772.79. So $772.79 is the sell order. Good till cancel, extended hours, confirm and send. And now we have both shares that we own sitting here with sell orders. All right, so I've finished placing sell orders on several other stocks, Lowe's being the last one. And at the end of the video, I will show you everything that we did from selling to placing sell orders to also buying. Again, that'll be at the end of the video. And for now, we are finished with everything that we received our sell alerts on. It's now time to move on to our buy alerts. All right, so out of every stock that we have on our buy alerts between for today, every single price is above what we earned today. From the stocks that we sold, we made roughly $90 in realized gains. We have a total of roughly $1,880, where $1,800 of this, taking away the $80 from today, or $90 from today, roughly $1,800. These are gains that are available for me to make purchases. If you've been watching my videos, you know that I also day trade in this account, and I day trade my long-term quote-unquote holdings. All of the stocks that I day trade, I'm currently maxed out on. So we should be able to spend all $1,800 of this money on any stocks that we're able to buy that we received alerts on today. And not just today, we also received alerts yesterday and on Monday and on Friday. We just didn't have any money to buy those stocks. And one of the stocks that we received an alert on several days ago is Caterpillar. Now we received this alert way back here on around September 10th and 12th. I just didn't have any money, and I was really hoping to be able to buy Caterpillar today, but right now we have price moving down, and not only that, we have price a little bit of distance away from our fast moving average. We also have the velocity of the movement of price on the MACD moving down as well, so we're losing velocity there. And we have the RSI possibly turning around and going out of overbought territory. I want to buy Caterpillar, so whatever we buy today, I'm going to hold roughly $500 back in case price moves on us for Caterpillar, because there's so much construction going on around the world that earth moving equipment right now is literally or metaphorically flying off the shelves. Earth moving equipment is in huge demand right now. If everything works out with this AI, they're looking to build 4,000 data centers here in the US. They estimate that we need 4,000 total data centers, but right now on the books, they're scheduled for roughly 2,000 data centers to be constructed in the next 5 years. And for that reason, I do want to purchase Caterpillar. You know what? I'm only looking, if it does drop back down here to the fast moving average, we're only looking at roughly $8 in savings. So I'm not going to, really worry about that. So I'm going to go ahead and purchase one share right now. We're looking to buy one share at $469.86. And we got that. So there's one share of Caterpillar. Now, if price does happen to move back down below our fast moving average and it moves back up, I might buy another one if I have the capacity, if we have the funds for that. So now we'll start with the most recent. We won't go that far back. We did miss quite a move from that. So we're going to look at an ETF XLI. So we had price move above our fast moving average. We had the fast moving average cross our slow moving average last week. However, we have price moving back down below our fast moving average, and the ETF XLI is for industrials. It's hard to say how well the industrials sector will be performing. There's experts on both sides of the argument saying that we're not going to be producing a lot of stuff because of tariffs, or we will be producing a lot of stuff because of the tariffs. So we're going to wait and see what happens to price tomorrow. And if price moves back up tomorrow and we have the money, then maybe we'll buy more XLI. But right now we're going to take a pass based on that information that we have there. Right, next buy alert that we received is for Arista Networks, which is ANET. So that is an old buy alert that we received back here. We now have price moving back down below our fast moving average. And we already have a sell order for all 4 shares that we own for Arista Networks. If I was maxed out, I would have 16 total shares. It's 4 shares per book. Next on our list is Cardinal Health, CAH. All right, so here we had price move across. We had average price of our fast moving average cross above our slow moving average. So that is a good signal to max out and buy everything that we can that our strategy allows, and which would be 3 additional shares. We have price basically moving sideways until yesterday and today. And this is an example when a lot of the tech stocks are moving down and bringing the S&P 500 down. A lot of defensive stocks will move the opposite direction. So we had 2 big candles of tech stocks moving down, dragging the S&P 500 down with it. In turn, the defensive stocks went up and have gone up today as well. So we are going to consider both of these candles a continuation of this cross, and we're going to purchase 3 shares, or I'm going to purchase 3 shares. 3 shares of Cardinal Health at $154.29. So that's 3 shares of Cardinal Health. Another one that we received a buy alert is UNP, which is Union Pacific. All right, so we have several things going on here. We have price crossed above the fast moving average back here last week, and we have the fast moving average price crossing above the slow moving average. We currently have 2 shares. This is a signal again to max out, according to our strategy, all the shares that we can purchase. And for UNP, I'd like to have 1 share for each book. So that would be a total of 4 shares. So we're looking to purchase 2 additional shares. Drop this down in our active trader. We're looking to purchase at 230.22. And we did at 230.22. That leaves us with $486.06. All right, so last week we received a buy alert for DLO, but we couldn't do anything with that. We had no stocks to sell, and therefore we had no money to put towards it. So we had our fast moving average last week cross above our slow moving average, which is a signal to possibly max out all the shares that we can get. And with DLO, I like to have, 64 shares. So that's 16 shares, 64, yeah. Sorry about that. My mouth is moving faster than my brain. So on DLO, I like to have 64 shares, which is 16 shares for each book. We currently have 16, so we're looking to purchase possibly 48 shares. So our current price is $14.92. We'll round that out to $15. So 15 times 10 would be $150. I need 3 more books. So that'd be $153. That'd be $450. So I should be good. So we're looking to purchase 48 shares of DLO. So 48. And we're looking to buy at $14.92. Exceeds our buying power. So we'll just drop this down to 3 books, which is 32 shares. Excuse me, 2 books at 32 shares, not 3 books. We're going from 3 books of 48 to 2 books of 32. And there we have our purchase of DLO. My math was way off on that. I don't know why I calculated $15 times 10 when I need 16 shares. Problems with recording live. All right, we only have $8.62. We've maxed out all of the funds that we had available. So with that, let's go ahead and take a look at the list of what we did today. So we sold Hewlett-Packard, HPE, Natera, NTRA, Unity Software, which is U, and an XLF ETF for financials. We placed sell orders for Palo Alto, PANW, Meta, which is Facebook. We did these 2 on video. Then we placed sell orders. I placed sell orders for Costco, Amazon, another ETF XLV for healthcare, Zoom, and Lowe's. So if you've been following me and you've been copying my trades and you own these, out of these, you might want to place sell orders. If you're not able to sell them at a profit, go ahead and take a look at that. Again, if you're following me, you are following me at your own risk. I offer no guarantees. I'm just an average Joe who's making money in the markets, and I wanted to help other people make money in the markets. Now, I ended up buying Caterpillar, Cardinal Health, Union Pacific, and DLocal. If you're following me and you have the funds to purchase any one of these, you may want to consider, again, do your own research, use your own decision-making matrix to make your decisions. I'm only offering my ideas and my opinions, and I'm showing you how I work through my decision-making process and using my strategy to make those decisions as well to sell or buy stocks. And if by watching my videos, you're able to learn my strategy and possibly use that or improve upon that, then I'm glad to do so. So the last thing that we need to take a look at are the results, my trading results for the day. All right, before I do that, let's go back to our base chart of the S&P 500 on the SPX. You can see that our price is still above the top of the zone of support. We're roughly right around the same price that we were when we started this video. So now we'll go down and take a look at our gains and our portfolio performance. And for today, we have, it registers $198.63 in gains, but these losses are attributed also, they account for the stocks that we sold today for roughly $90 in realized gains. If you're new to my videos and you're seeing this for the first time, Charles Schwab records my sales by first in or last in, first out, meaning that the very last stock that I purchased is the one that gets registered for the sale. So if the last stock I purchased is higher than the selling price, that will register as a loss. However, from my records, when selling a stock. I sell the highest priced stock that's less than the current price. So we sell that at a profit. So we're actually closer to $300, more like $280 in realized gains for the day. And you'll see that when we were unable to sell stocks or shares at a profit, we set sell orders, and each sell order is set at a price that is profitable. So those will either trigger on their own, or at some point we will cancel those sell orders and hold them for profits as the market goes up. But in this particular strategy, I do not sell stocks at a loss. We hold on to stocks until we're able to sell them at a profit. Now, our portfolio balance to date, our account is sitting at 6.80% for the account that I opened on August 19th. The S&P 500 is at 3.97. Now, this account was opened with all of the funds and all of the cash, everything having, all assets were transferred from this account to the new account because I had to close this account. I accidentally recorded my account information and saw that it was online on the YouTube video. So I had to rush up and delete that video and immediately open another account and start transferring funds. At any rate, the old account was sitting at 16.26% compared to the S&P 500 at 10.54%. So combined, my account is now at 23.06% of portfolio performance gains for the year compared to the S&P 500 at 14.51%, which is a difference of 8.55%. So I am performing 8.55% better than the S&P 500, and that's due to two strategies. I can't claim that this entire portfolio performance is based strictly off of my swing trading strategy that I am making these videos of. The swing trading strategy videos that I'm recording are to help inspire people to enter the markets and open up a retirement account. And by doing that, and by possibly copying some of my trades, you'll be holding on to stocks for decades. My videos these swing trading strategy videos are not for day traders. They're not for people who want to come in and trade. They're not for people who want to trade the markets thinking that they're going to get rich quick. It's for people who have IRAs or are thinking about opening an IRA, and they can use this as long-term investment strategy to gain wealth over time as they dollar cost average into the markets. So about a week or two ago, I started putting in our chart of the day. So today's chart is Intel, and I need to go to the 1 day, 1 minute and change this to a 2-minute chart. Time frame, we're going up to 2 minutes. And this is our chart of the day. But up until today, I hadn't been discussing or talking about my chart of the day. So it's something that I'm going to try to start to do on a daily basis, so you know what the relevance of the chart is, as opposed to it just being a thumbnail for the video. So recently, Donald Trump required that Intel provide the United States government, thus the citizenry, upwards of 10% of the shares of the company. Donald Trump feels that owning stock in American companies is better than just giving them money, which is what they got from the Biden administration. They got a huge loan from the CHIPS, CHIPS deal. Biden gave what largely was a failing foundry for making computer chips to try to compete with NVIDIA, gave them a great deal of money. So Biden had given a grant to Intel Corporation of nearly $10 billion. And Donald Trump is not a fan of grants. He believes if you give a corporation a grant that they could do whatever they want with the money, and since they don't have to repay it. So he required Intel to give 10% of their shares to the U.S. government. That way the citizen gets something back at some point in the future. Now, I don't typically have a dog in the fight, other than I'm not a fan of grants either. I'm not a fan of grants on the micro level, such as small businesses. then I'm certainly not a big fan of grants at the macro level where a huge corporation would get $10 billion. The only dog I have in the fight for the United States is to get out of debt and climb its way out of debt. And anything that helps accomplish that, I'm a fan of, other than writing off the debts. At any rate, Intel opened up at around $29.37. We're currently at $31.70, which is a rise of 6.5%. Now, I was a previous owner of Intel. When I do own Intel, I own, when I'm maxed out, I have 24 shares. I currently have no shares. And one of the reasons I don't have any shares is on the monthly chart. At the beginning of the month, the fast-moving average was below the slow-moving average. That's now reversed. About 2.5 weeks ago, the fast-moving average crossed the slow-moving average on the monthly chart. I'll go ahead and show you that now. So we'll come in here, go to 3-year on our monthly candle. You can see that price has moved. I'm sorry, the fast-moving average has not crossed above the slow-moving average on Intel yet. Price has. But I was mistaken. The fast-moving average has yet to move across the slow-moving average. My strategy mostly requires that when the fast-moving average is below the slow-moving average, we try not to purchase any stock. However, given the situation with Intel, I might purchase some stock if we have money tomorrow in Intel, or I might wait until the end of the month to see what happens with price, to see if it continues to go up. But let's go back to our daily chart, move to the 2-minute candle again. So tomorrow, if price moves up, I'll consider purchasing maybe a few shares of Intel. If I do purchase Intel stock tomorrow with the fast-moving average still below the slow-moving average, and this is true of any stock, I will typically only buy one book. So in this case, if I were to buy Intel tomorrow, if we have a continuation in price moving upwards, I would buy 6 shares. That's all I would commit to any stock if the fast-moving average is below the slow-moving average. Even on the monthly chart, it's the averages move somewhat the same. We'll get a cross and it might run for days or weeks or months, and then the same thing on a cross down, it might run for days or weeks or months, and then on a cross up, it might run for days or weeks or months. This is a 3-month chart. On the other, this is not the 3-month chart. The previous chart is a 3-month chart. This is my daily chart. Sorry about that. Again, my brain is moving faster than my mouth can. At any rate, on this daily chart, you can see even for a 2-minute time frame, this isn't days and weeks and months. This is just minutes at a time. So I'll go back to be correct and go to a 3-year 1-month chart. And then what we'll do, we'll just go ahead and change this to a year. And expand this out to, where is the time frame? We're going to go to 10 years. So you can see even on the monthly chart, it can run for months and years at a time. Same thing here. We crossed to go down on November of 22 and didn't cross back up until September of 23. So it's almost a year that it's spent in a downward trend. This is where we are today, and hopefully we're at the beginning of a new upward trend, especially with the U.S. taxpayer investing into Intel, and especially since Intel got $10 billion, especially since now that they don't have to pay it back because the U.S. citizen is now a shareholder. At any rate, sorry for the confusion on that. We'll go back to our 3-month and 1 day. There we go. There's our standard chart. And we'll reset this back to SPX for the S&P 500. And we are done for the day. Sorry about the confusion there. But we made it through the day. It's Wednesday. I hope you all have an amazing rest of your Wednesday afternoon.